Hi friends, I'm back with one more video. Today we will see whether looking at the bank nifty chart, do we have the potential to deploy a Ironfly or a ratio spread or a debit spread. So I'll take you to the 15 minutes chart of bank nifty. So let me quickly see the price action, what the price action is making. Okay, we have, see, the current price stands somewhere here. The black line is the current price. Okay, market is standing at the current price. Alright, and if you look at the immediate resistance, you have a immediate resistance somewhere, I would say somewhere this point, because we have a resistance 1, we have almost resistance 2. Okay, so this is almost like resistance 3. Okay, the current price stands here, so you have the immediate resistance, and let's see where is the immediate support. So I would say the immediate support would be somewhere here, because we have too many resistance 1, resistance 2, 3, 4, 5. So this will become a very strong support. This black line is where the market stands, the bank nifty. This is your immediate resistance 1, this is your immediate support. So let me show you in terms of percentage. It's almost like 1.12% on the upside, and almost like 1.2 or 1.16% on the downside. So net you have equal distance on the upside and downside. Alright, so we have another 2 days for expiry. So I'm just doing this analysis after the market hour. So just assume that tomorrow the market opens flat, or let's say at 3 o'clock, today at 3 o'clock before the market closed, you add similar kind of structure of the market. So now looking at the structure, so can we just go for Ironfly? Why not? See, I'll tell you. Let's say the market goes up from here. Okay, so what is the immediate resistance? This is your immediate resistance, right? So there is high probability that market will go up, it might take a resistance and it might come down. Or else let's take another example. Market stands here, it might come down, right? Take a support of this support line, and it might make a up move. So what does this mean? So we can just go for the Ironfly. This is your typical Ironfly, right? This is your sold positions, and if you look at, see, this I'm showing it you in the horizontal. So just try to understand. So this is a sort of Ironfly, and then you can have your edges somewhere here, right? This is the Ironfly, right? I'm not good at drawing, but I'm just trying my best to do. This is your Ironfly. So don't you, so friends, looking at, see, that's what I mean whenever I make the videos, right? So we need to have the view of the market. So looking at the view of the market, so don't you think this is the best potential area for us to go for Ironfly? Again, I'll show you. So what will happen, let's say, see, either the market can play out in this area for like at least 1 or 2 days, right, before it gives a breakout. Alright, or else the market can play within this area before it gives breakdown. Alright, so why don't we utilize this opportunity in terms of deploying the Ironfly? Because the market stands perfectly at the center, so you have equal, this is your Ironfly, you have equal amount of distance on the upside and you have equal amount of distance on the downside. This is your typical Ironfly. You can just buy to your call and sell here, and based on the resistance you can buy your edges and just make it a Ironfly, right? This is, I wanted to make a very short video, so this is the way we need to make the Ironfly. If you're not comfortable with Ironfly, so what strategy you can deploy? You can just go for ratio spread, right? Your buy, and this one would be your sell, and you can take one of your sell. Maybe, see, you do not have a, honestly telling, this is a big gap up, right? Sorry, this is a very big gap up, so you do not have the immediate resistance line, right? You have a big gap up, so immediate resistance line would be this one. I would say this one would be your resistance line. So I think the best potential place would be to go for the Ironfly, because you have 1.2% resistance on the upside and 1.2% support on the downside. Let's say the moment you deploy the trade, right, this is your Ironfly. Okay, let's say you deploy the trade and the market goes up and it breaks the resistance, and if it keeps going up, right, you have to just do the adjustments by doing the reverse buying, or else you can just get your buying edge inside the calling buying edge inside, so that you can just mitigate your loss on the call side. If it comes down, if it breaks, right, you can just do the reverse buying on the call side, and then you can just bring your put inside, so that this maximum loss area you'll be able to mitigate. Alright friends, so this is a very short video. So I wanted to make this video so that you will get like more clarity in terms of what strategies we need to deploy. So we have just 2 days, tomorrow and day after tomorrow, right? So we can just take this opportunity to deploy the Ironfly, because 2 days we have a good amount, see maybe almost like 1.26% down and 1.26% down. So if you want to take bigger range, what you can do is like you can just take the high of this candle. Simple friends, even you can just take the eye of this candle, or else if you want bigger range, right, you can just come and take the eye of this candle. Let me delete all these things. Let me show you one more time. Right, rather than having a narrow range, you can just take it to this eye of the candle, and also you can just get it, you can take this. So you'll have now more sorry, I'm sorry, so this is not the one I was just trying. So you can just bring your support line to somewhat here, so that now you will have the bigger range. If you look at the market, right, so you have almost like 1.71% and almost like 1.71 and 1.71. So you can just deploy the Ironfly, right, by having some more buffer. So typical, you can just deploy your Ironfly, right. This is your Ironfly, and you pretty well know that this is the strong resistance and this one is the strong support, but at least you are taking some buffer of how much, right, almost like 0.5% here and almost like 0.5% here, so that you're just taking, so that will help you in terms of doing the adjustments. Let's say you have your original line here, okay, and you have your original support here. So you have two things, right? Whenever the market breaks your first resistance, let's say the market breaks your first resistance, you have at least some scope to monitor. If this breaks and if this retest and if this comes, right, you will get into profit. If this breaks and if it comes your second resistance, then you can start doing your adjustments. Same with here, right? If it comes, if this support gets respected, it will bounce back, right, so that you will be able to trap the market into the green zone. On a bad case, if it breaks this support and if it takes this support, so then you can start doing your adjustments in terms of mitigating your loss. Alright friends, thank you for watching my video.